Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, a weekly look at the world of business and economics. This week, Turkey. It's Erdogan versus the markets. From unconventional economics to the firing of central bank governors, it's all unsettled the international investors. We look at whether Turkey's economy could be heading for bust just in time for elections in 2023. Also this week, Mozambique, huge gas reserves, big investors, but also an insurgency that could upend its route out of poverty. And a court victory for the employees of South Asia's shipbreakers. But could it also see the demise of the industry that has scarred the beaches from Bangladesh to Pakistan? In just 2 years' time, Turkey will mark 100 years since its inception as a modern republic, when the man on the 100 lira note, Mustafa Kemal Ataturk, was elected its first president. But almost a century later, and the man currently holding that office is finding himself in an uphill economic battle, with elections not far away. Recep Tayyip Erdogan, Prime Minister since 2003, President from 2014, has always been an expansionist, capitalizing on Turkey's strategic position both geographically and politically. Like in 2011, when he announced a controversial plan to build the Istanbul Canal. It would run parallel to the Bosphorus. Now, the problem is that renewed efforts to get that project moving again has opened up a real can of worms. There is a possible breach of a treaty that has kept the peace and the traffic flowing through the Bosphorus, to just who will pay for it, given the states had to spend heavily on the pandemic. Its debts have soared to $270 billion. But on top of that, international investors have been losing faith in Erdogan's authoritarian rule and unconventional economics for the last few years. Maybe the simplest way for us to illustrate this is by using the Turkish currency, the lira, as a barometer of confidence in the country, the economy, and the president. So what you are looking at starts in 2003 on the far left. It goes all the way up to today. And remember, keep this in mind, when we talk about a currency weakening against the dollar, we actually see it rising in value. I know it looks odd, but trust me, this is not a good reflection on the economy. Rising is bad. So here we go. Erdogan's first decade in power, 2003 to 2013-ish. Strong growth thanks to all that investment in infrastructure, generally well received by the international investors. The currency is strong. Then we have what turns out to be a key moment, or at least a turning point. July the 15th of 2016, the failed coup attempt. Unsurprisingly, the currency drops, rising on our graph, to the point where $1 buys around 3 lira. August 13, 2018, and then US President Donald Trump imposes tariffs on steel and aluminium. Bang, the currency crashes 20%. But over the 12 months to that point, the lira had already slumped 40%, again, rising on our graph, pushing it into recession. Much of that has to do with Erdogan consolidating power post-attempted coup. It's unnerved the investors at 6.85 lira to the dollar now. Then there are these unorthodox economic policies I've been talking about. March the 22nd of this year, 2021, Erdogan fires his third central bank chief in 2 years. This is because he raised interest rates to curb inflation, which is currently at 16%. Now, that's the right thing to do, but a dollar is now buying 8.16 lira. Now, the opposing argument to all of this is that Turkey's economy actually grew close to 6% during a pandemic, making it and China one of only 2 nations in the G20 to actually register growth. But there's that inflation at 16% that I mentioned. There's the consumer inflation at 30%, kind of wipes out all of those gains. As does Turkey's central bank having to spend an estimated $100 billion defending the currency. And as you see from our chart, that has been an entirely losing battle. So what next? Well, our guest this week has been predicting a boom and bust cycle, ending in a crash around the time of the 2023 presidential election. He also, rightly, predicted back in 2017 that with the Turkish economy expanding faster than China's, all would not end well, which it didn't. With us now on Skype from London, Charlie Robertson, the global chief economist with Renaissance Capital. Charlie, good to have you with us. Tell me about this boom and bust cycle then. What led you to that sort of pattern and conclusion in the first place?
We have been watching this happen over 10, 15, well, actually maybe generations, maybe even centuries in Turkey. But it's become something financial markets have got very used to. that Turkey tries to overheat its economy with too much lending. That widens out the current account deficit. Eventually, the currency crashes. They have to hike interest rates. Lending stops, and we hit a bust. What's been getting problematic for Turkey is that this has been happening closer. The gaps between these crashes have been happening more closely, and the depth of the crashes has been even bigger.
And apparently it's all going to come to a head in 2023 to coincide with the elections. You're still holding on to that belief? Is anything that's happened in the last, well, let's just say this year, to change your view or alter your view at all?
If anything, I'm concerned it's going to be brought forward. Sacking the very good central bank governor that got appointed at the end of 2020, who'd done a great job stabilising the economy, stabilising the currency, strengthening it, in fact, getting foreigners to put money back into Turkey. When he was gotten rid of by Erdogan just a few weeks ago, the guarantee is that Turkey will be cutting rates earlier than it should be, that we are going to see another boom, and market faith that Turkey's going to get better from here is at a rock bottom.
So no post-pandemic bounce, the type of thing which a lot of countries are looking for, or hoping for?
Not as much of a bounce as there should be. Unfortunately, this third wave we're seeing in so many countries is hitting tourism. I thought we were going to get much better tourism figures this second quarter of 2021. The numbers are going to be really bad, not helped by at least 500,000 Russians being banned from coming over the next 6 to 8 weeks, thanks to this falling out between Russia and Turkey again. So it's looking tough. Yes, there could still be a bounce. We might still get another boom as a result of the interest rate cuts this new governor will deliver at some point. We will get a bit of a boom, perhaps in 2022, followed by a bust in maybe late 22, early 23.
Charlie, in researching this and looking at Turkey's economy, particularly since Erdogan has been there, it's been all about international investors. They've been so important to the country. Tell me why. Why are they so dependent? I mean, Turkey's a big country. It's got a big population. I would think, and maybe you can explain to us, that it could be a little more self-sufficient than it is.
Yeah, look, and there are countries that have got their own energy resources that help, whether that's nuclear power in France or coal and wind and electricity and so on in other countries. Turkey hasn't got that. And they are building nuclear power stations now. They are trying to do something to reduce that. So once you strip out their energy factor from their current account, they've often been closer to balance, in fact, in good years. But I think it's the energy side of the story has been a problem. The second issue is they just haven't got enough FDI, foreign direct investment, into manufacturing to give themselves the big export manufacturing base that a Korea or a Taiwan has got. And I think that's another factor, which is, and the difficulty is that Erdogan isn't helping here. When you have this rapid boom-bust cycle, that scares investors away. It doesn't tempt them in.
Okay, so we've got low FDI, foreign investment. We've got a currency that's in all sorts of trouble. Is there an opportunity here, Charlie? Is there an opportunity to rebalance the economy, to get exports moving again, to make lemonade when life gives you lemons?
Absolutely, there should be. The currency is the cheapest in emerging markets based on our model. And we've very rarely ever seen a currency this cheap in emerging markets relative to its own history in real terms. So this is a fantastic opportunity to move away from the consumption model of bank lending, driving up consumption, driving up imports and then crashing, and moving towards an export-led, investment-led model, which has worked so well for Asia. And in 2018-19, when Turkey had its terrible crisis then, I hoped, I put in the risk scenario, the good risk scenario, that's what Turkey would do. But I said leopards don't tend to change their spots, and I suspect we're going to go back to the boom and bust. And of course, that is what's happened. So unfortunately, yes, it's a great opportunity for Turkey to change the model, but it's not happening. And the sacking of the central bank governor tells us that.
Right. So all of this then moves back to President Erdogan himself, the man who is leading all the big decisions. What is his popularity really like these days? Because inflation's high, unemployment's high, But then when I looked at different popularity polls, some were saying his popularity was at the highest it's been. Others were saying it's crashing through the floor. I mean, I guess it's who you want to believe at any point in time. What's your take?
Well, he's a masterful politician, terrible economist in the views of the markets, but a masterful politician. And he has an ability to tap the issues which help deliver him electoral success, and he's done so for 20 years. However, there is a rising challenge now from opposition parties. There's the new mayors of Istanbul and of Ankara who are potential challengers to him. And after 20 years, you've got to say there's going to be a decent chance that people will vote for change finally. But for some of the issues, it doesn't matter so much. Inflation, for example, it doesn't matter so much if you save in gold and foreign currency. And what Turks have been very clever to do in the last few years is to make sure that most of their savings are in gold and foreign currency or real estate. And those are all inflation hedges. So they're less bothered about the inflation. They've worked out a way of managing Erdogan's economic policies that doesn't hurt their middle class wealth so much. So I suspect unemployment is going to be the bigger issue, and whether or not he can actually deliver some real income growth over the next year or two.
Charlie Robertson, so interesting talking to you about this. Thank you so much for your time.
Thank you.
To something completely different now, liquefied natural gas, Mozambique and ISIL. Let me explain. LNG is seen as a transitional solution between oil and green renewables, but the world is actually facing a shortage of supplies in the coming decades. And here's one reason why. Mozambique had been expected to start churning out gas later this decade to partially fill the void. Now, for a low-income, debt-laden country, that revenue would be very welcome. And billions are being poured into infrastructure by foreign corporations to make that happen. But here's the twist. Where the richest deposits are, in the north, there is a vicious insurgency linked to ISIL. Thousands of gas workers, mostly immigrants from more affluent nations, barely escaped an onslaught last month, while tens of thousands of locals had to abandon their homes. Now, with most communications still severed, it is hard to gauge exactly what happened after insurgents hit the town of Palma. The local governor reported significant loss of life and infrastructure destroyed. On the map, we've got the onshore facilities there, and then marked in yellow, those extremely valuable offshore fields. Mozambican troops, backed by South African mercenaries, took 10 days to regain control of all that. So that's the background. Here's the analysis now with Jasmine Opperman. Jasmine's an Africa business risk and security analyst with the Armed Conflict Location and Event Data Project. Joining us from Pretoria in South Africa this week. Thank you so much for your time. I want to sort of split this into the issue of insurgency and then the issue of natural gas in Mozambique. On the insurgency, is Mozambique capable of dealing with this, or does it need more help?
Unequivocally, no. For the past 3 years, that has been clear. They've started relying on the rapid intervention unit of the police. The military simply do not have the manpower, nor the capability or capacity to be able to break the momentum we are seeing in Cabo Delgado. And hence, now that the primary responsibility is back with the military, they do need assistance beyond training only.
Okay, so that's the primary side. The secondary was the, Russian mercenaries who were brought in. There was a South African advisory group brought in as well. Did they make a noticeable difference?
In terms of Wagner, they completely overestimated the ground forces and the support they could get from them. It was a rushed in with a tragic result of some of them being killed by friendly fire, some of them beheaded. The Dike Advisory Group also had a situation of all odds against them. It was a mission creep. They had to adjust the whole time. Weapons, ammunition, no cooperation from ground forces. And I don't want to glorify private military consultants. The eye in the sky operation did have some impact. And it was shown also during the Palma attack But as we know, their contract has ended. They are not there anymore in terms of countering, which leaves a vacuum in Cabo Delgado, where there is no integrated strategy at play.
Did anyone else, more widely afield, offer any assistance? The US has got Exxon interests, or was looking at investing there, certainly. France has got Total. Did they want to get involved at all?
Before I get to them, I just want to say that there are still a few mercenaries running around, and it is a mercenary hunting ground at this point in time, needless to say, with great opportunity. But France now, the United States, deploying close to a dozen Green Berets for a 2-month training is going to have little impact. It is simply too short. In terms of France, Total has gone in complete silent mode. There is a basic skeleton staff left at Afundi, and I don't foresee them coming back until the government has proven that they can provide the security needed. I don't see that project up and running within the next 12 to 18 months. France, needless to say, has its interests, and we all have seen in Sahel where they want to be the dominant force, and we see, sadly, Iraqification at level best.
Gosh, so it's not going well at this level at all, this sort of response level to the insurgency. And then below that, you've got the issues to do with the actual gas exploration, the fact that locals were relocated, the fact that they didn't get much compensation. Did the government in Mozambique just get this wrong for their own people in the rush to explore and exploit all of this gas?
Yes, in a nutshell, they first denial, then they were just mere bandits, then it was organized crime, and then they said this is a foreign threat linked to the Islamic State, not admitting that the local roots are predominant. But I want your viewers to understand, this is not only about unemployment, about a youth that is angry. We would have seen massive support for the insurgency if this is the case. There is an extremist voice at play, but it is localized in Cabo Delgado, and the Islamic State is trying to hijack it, and the Western media has propagated and given them a status which they simply do not have within the insurgency at this point in time.
So then who or which group is really in play here? Because there are reports, and I know communications has not been great from that area, but there are reports of locals being attacked themselves, which makes you start to wonder, well, who's really doing the attacking?
At this point in time, we sit with a problem. Simple. Al-Sunna, being present from the start, has not relied on Telegram or propaganda channels claiming credit. There were a few videos in Swahili. Hence their objective and what they want to achieve remains debatable. But what is clear is that this group, now comprising of about 19 cells and about 3,000 insurgents supporting them, have a clear anti-government sentiment and do not want to see any form of Mozambican government present in Cabo Delgado, and policy failure out of Maputo accelerated the whole situation.
Jasmine Opperman, tremendous to talk to you about this. Thank you for your time and for your expertise. Finally, where does all our plastic, electronic and toxic waste end up? Well, broadly speaking, it gets thrown on a ship like this and sent to places like China, Indonesia and Malaysia. Now, China has laid a pushback and banned imports of rubbish, but really, Asia has been a dumping ground for the industrialised world's cast-offs for way too long. Here's a thought, though. What about these actual ships? In some cases, they have been sent to the scrapyards as well, in Bangladesh, India and Pakistan. When their useful life is over, they're sent to the so-called shipbreakers. But even that now could be under threat after a landmark ruling from a London court. It said that a shipping company selling a vessel could owe a legal duty of care to the shipbreaking workers in Bangladesh. That means Hamida Begum, whose husband fell to his death while working on a 30,000-ton oil tanker on a beach in Chittagong, can now sue the shipping company Maran UK in London. With us from London to talk about this is Oliver Holland. He's a partner at the UK-based law firm Leigh, which is representing the wife of that deceased worker. Oliver, thank you for your time. Hamida Begum, tell us about what happened to her husband and how you came to be involved.
Well, Hamida Begum is a Bangladeshi national who lives or lived in Chattogram in Bangladesh with her husband Khalil Mollah, who was a shipbreaking worker on the beaches there. He was working in Zuma shipyard when he did dismantling vessels like this vessel that was the subject of this case, the Ector. When in 2018, he fell from his death, fell from the ship and died instantly whilst dismantling it. This resulted in our client, Hamida Begum's life being pretty much torn apart. He was her sort of sole support, and she was left with nothing along with her son. Had to return home to her family's village in order to survive, and received very little compensation in Bangladesh. So she approached us and asked for our assistance.
So take me through the ruling then. The idea that if, and it's in this case, as you say, Marin UK, or if I had a ship and sold it on, am I still responsible for it? Is there still a duty of care to what happens with regards to after I've sold it on?
Well, the shipbreaking industry as a whole, something like 80% of the world's supertankers are sent to South Asian beaches, either in India, Pakistan, or Bangladesh. And they are sent there where it's commonly known that vessels will be dismantled in extremely unsafe and hazardous conditions, just on the beaches with bare hands and minimal protection, also causing significant environmental damage to the areas. This is a practice that's been going on for 20 to 30 years with pretty much total impunity. When these vessels come to the end of their life, they are effectively toxic waste. They contain extremely hazardous substances like asbestos, PCPs, and other oils and other substances like that. And they're also extremely hard to dismantle in a safe way. And the shipping companies, shipping industry, send these vessels to South Asia at great profit, when they could send them to other countries where there are safer conditions, but that would result in them receiving less money. So the basis of this case is that, given they know that this is what will happen, and that they know that there are no safe conditions on these beaches, that it's very likely that a worker or workers will be injured or die when they dismantle these vessels. And they send them there at profit, in that knowledge. Therefore, they should be held liable when things go wrong.
So ultimately we want, sorry to interrupt you, ultimately we want the working conditions to improve. That would be the end game here. Does this case help push things in that direction, or actually could it end up benefiting, all the unregistered similar facilities, the work almost getting pushed to them, unregulated ones?
Well, we would hope that it would improve conditions. If the companies that are sending vessels to South Asia are effectively in control of where they end up, and if they insist on better working conditions in these yards, then the yards would of course have to improve the working conditions. So the power lies with the shipping companies, not with the shipyards in that sense.
But what about the laws? Are they just not stringent enough in the first place? You're saying about responsibility for the companies. What about actual legal responsibility and rules that govern the industry?
Well, absolutely, yeah. I mean, it's obviously there's a degree of responsibility in Bangladesh, in India, and Pakistan as well. Ensuring that there are sufficient regulations there. Unfortunately, there aren't. And that is obviously something that needs to be addressed as well. But ultimately, if there is a desire for shipping companies to send vessels to these areas, then there will be conditions for that to occur. So the power does lie with the shipping companies as well.
It's not a story we hear a lot about, so I'm glad we could talk to you about it. Oliver Holland joining us from London. Thank you.
Thank you.
And that is our show for this week. But do get in touch with me. I want to know what you think, what you want to see on the show. You can tweet or DM me at KamalAJE. Use the hashtag AJCTC if you would, please. Email as well as the accounting the cost at aljazeera.net. And there's more for you online as well at aljazeera.com/CTC. That takes you straight to our page with individual reports, links and entire episodes for you to catch up on. But that is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.